book on that.
Yeah, so there's two different due diligence right now, right? There's the lender side of due diligence where they're valuing the borrower, right? They get the house to secure the property, they get the information about the house, they fix it up, whatever they do with it, and then they go ahead and find a borrower to fit the house. And they come up with the
Mhm.
terms, make sure the borrower's underwritten, make sure that the borrower is, the Dodd-Frank rules are in place, and make sure that the DTI is good, down payment's good, everything's there in place for them to really kind of move forward. But from the
And
note
then
buying side, we're doing and make sure the paperwork collateral is right, making sure that these, what's going on with the borrower in the past, what's going on now, are they paying, are they not paying? Are we foreclosing? What's the status of foreclosure? Is the collateral file solid?
have
What's
they
it?
done bankruptcy
What
in the
other liens
past?
on the property?
Yeah. Yeah. What state it is in? Do we need any licensing for that state? Uh, yeah, what's current interest rate? When's the last time they made a payment? What's been their pay history over time? Can we see if they've made on-time payments all the time, or have there been some late payments in there? Like that's the kind of things that we're looking at when we're looking at buying a note.
Yeah, so I don't know how much you guys really standardize that, right? And that's kind of where I'm coming in, is trying to standardize that. And
Sure.
hopefully your groups can take a page out of our book and standardizing that as much as they can. And I think that would
So
be
the problem with standardization in our space is you have a borrower who's maybe an I-10 borrower, one with, bad history, maybe not W-2. So the bank typical process of underwriting these borrowers are extremely difficult.
Mhm.
I think where you fit in the puzzle is that there are underwriters who will underwrite these kind of notes. What they don't have is that person to turn around and say, I need that licensed origination person to go in there and originate that note. Where the underwritten process, maybe a little bit, it's a little old fashioned, right? You may need like, okay, you have to pay off this cell phone and do this, or hey, the W-2 is old, or they don't qualify for the typical Fannie and Freddie products. And that's where our space comes in, where we'll buy that note if it's secured right, but the underwriting is not a rubber stamp process.
Yeah.
Yeah, exactly. We do that with our non-QM program. So we deal with a lot of I-10, foreign national, everything that your standard stuff doesn't do. So there are a lot of outlets. We call them my investors, right? That are buying the notes from me, right? That have these written programs. So the closer you guys and your clients can get to those written programs, the closer they'll get to being securitized, right? Because I'm selling them to the guys that are securitizing these DSCR notes in bulk.
Mm-hmm.
So the more they can do, the better. And the DSCR, there's a big appetite right now as well in secondary. So I know you guys kind of have your own pool, right, and your own thing.
Yep.
But for those people that are looking, maybe have a large, portfolio of notes, if they have done the proper due diligence and they are truly securitizable notes, you can make some big bucks upstream, because the appetite for DSCR is just crazy right now. And there's not a lot of people doing activity, right? So activity's still down, but DSCR is just hungry, right? The DSCR rates are coming. I do a show every morning. I know you like
Yeah.
you said, David, your people don't listen, but we do our daily rates. And conventional investment is more expensive. Fannie Mae is more expensive today, right now, for me to do a 30-year Fannie Mae investment than a 30-year DSCR with a 3-year prepay, right? So 3-year prepay
Wow.
is pretty standard,
Mm.
and we're beating it by just a hair, but it's been like that for the last 3 weeks, right? So the DSCR secondary is really hungry. So if you can standardize at least to that, it's pretty easy, right? So DSCR is pretty easy to standardize. The I-10 stuff, that is difficult, as you mentioned. That's
It's tricky.
very hard to get a one written program that works for all the banks and outlets. It's just not going to happen. So you do have to have some flexibility within there. But the DSCR, that is becoming a very large secondary market, and it's having, I guess I would say, the most positive activity when the rest of the market is kind of coming,
Gotcha.
the sky is falling, right? Every
So
headline you see in the major news is the sky is falling with rates. But DSCR just keeps coming closer and closer to the conventional stuff everybody's used to. So that's
so we
where my head's at, is DSCR all the way. If I was you guys, I would be trying to securitize everything as close to the industry standard of DSCR, as close to one DSCR as you can. And that also means you probably got to really work with actually seeing who's leasing up the space and making sure they're leased out and ready to go. But once you have those assets and they're actually leased, then you could really, really securitize them for some big money, especially at the rates you guys get. It's crazy, right? That you guys write the notes at.
So a couple
Yeah.
of things there. So let's go back and for those of our listeners who don't know what DSCR is, can you explain what that is, what that stands for, and how is that
Sure.
different?
So DSCR is our favorite loan. So that's debt service coverage ratio, and basically no income, no employment. So it allows us to do it business purpose loans, which I'm sure a lot of you guys are, the people that are not licensed, as you mentioned, are trying to fall in that category where you can kind of get away with it, right? So
Yeah.
we do a lot of those, but DSCR is typically business purpose, which allows a lot of flexibility with secondary and the laws and all that stuff, a lot of flexibility with licensing. But it's no income, no employment, just the estimated rents from the appraisal versus the expenses, right? The PITIA of the mortgage and the expenses for the property. So as long as the property cash flows, that's a super liquid investment. Anything over a 1 DSCR that cash flows monthly is basically going to be a solid note if you have a prepayment penalty. Anything without a prepayment penalty is not going to be as attractive, and it's going for less than conventional. But anything with a prepayment penalty 3 to 5 years is going to be sold on secondary for a higher price than Fannie, which is just, it's never really happened before, right? And as far as I've been only doing this maybe 5 years, but there's been a lot of liquidity and it's never been like this, right? And DSCR is kind of the name of the game, I guess I would say, where all of the investors are saying this is where our money needs to go. This is where the growth is. This is where the opportunity is. Especially when conventional's dying up. I'm sure they'll change their tune once we get some more action. But for right now,
But just a little more clarity on the DSCR, right? Most people here are doing residential properties, right? If a borrower comes to you and wants to create a loan with a borrower who lives in the home, would you consider that a DSCR?
Nah, we can't do that. So that's where the licensing comes in, right? So
Mhm.
your clients, don't have that same bar that I do, but yes, we can't do any of that business purpose type stuff with the primary borrowers. Of course, your investors could, right? If they're planning on the borrower, eventually it not being a primary home, primary occupancy, of course, as long as the rents versus the relative costs, it's positive, then you should be good. But yeah, for us, we have to have income if it's a primary home, second home, anything like that. It's only those true business purpose that we can use those DSCR loans for. So it's kind of a gray area. It's kind of the cross between commercial and residential, and it's become that gray area has become the big the big pool out there of where everybody's heading, because it's a lot of flexibility. A lot of flexibility
Absolutely.
for people on my end with licensing where we may not have to have it. A lot of flexibility in secondary where they don't have to be as tight on the DTI as you guys mentioned, and all the stuff that isn't as black and white as rents versus expenses.
Yeah.
Yeah.
And I think what people don't realize is that the DSCR loan is a business loan, right? It's a business to business mindset where what does business to business mean? This doesn't mean that you're lending money to a big national business. It just means it's not a personal loan. It's not going to a residential borrower. It's really going to another business, right? A landlord could be a business, right? It could be big, it could be small. So that's a big thing for it. Now, would you guys ever consider doing loans or underwriting a owner occupant borrower who they sell or finance, doing a wrap note where they go in there and they would give a loan to a borrower who's underwritten, has all the credentials, and give them a loan and write that underwriting?
Well, I can definitely help out. Yeah, I mean, if you guys are providing the liquidity and stuff, then yeah, it's just to meet our secondary, our typical written guidelines, or sell it to Fannie or Freddie. Obviously, it has to meet all their stuff. But of course, definitely open to helping your guys create those notes correctly. Uh, I see the most opportunity in the DSCR, but obviously, you guys have been doing this for many years, and so the traditional stuff is no problem as well. Um, we have all the tools available that all your traditional lenders would have, so we can use those when we're underwriting the file. So it's real easy for us to do that. Um, The part that is more of the gray area where the opportunity is, where I think your guys could grow the portfolio more, is the DSCR, where it becomes easier, more flexible, and more securitizable, which is, what's kind of counterintuitive, right? You would think that those are the worst loans out there. Like, okay, I don't have any DTI, I don't have any personal income, I have nothing to do with this borrower. How is that a better loan than a loan with personal income, with W-2, with the whole underwriting? And it's just, that's the industry we're in right now, and it's interesting. That's probably what I would have your people take away from here, is that you don't have to stick to the fully underwritten borrowers as long as it's an investment property, right? So primary, got to stick to your guns, but where you can let loose a little bit and find some more opportunity is any investment stuff, where you traditionally might have thought you had to be a little more strict on the DTI. Not at all, right? It's strictly, we only need a credit report is going to set the pricing. So you're going to need to pull credit. You're going to need to prove that there's no late. So a fraud guard is what we use as our typical vendor for, as Nathan mentioned, just checking for foreclosures, bankruptcies, stuff like that. And mortgage payment history, no mortgage missed payments, right? That's basically it, along with the rents. So there's no, an ID, right? We have to prove ID, right? Same Patriot Act stuff. So not a lot of moving parts, a lot easier for you guys, a lot easier for us. So
Absolutely.
I preach about DSCR all day. You hear me on the show, so that's obviously what I love. But the primary stuff, sure, use my license all you want. I don't.
What does a borrower, what does a
that.
lender have to bring to you for you to create a loan for them? What items would you give a task list, kind of thing?
I mean, if it depends on what guidelines they're going for, right? So if they're wanting it to be to Fannie or Freddie guidelines, we all use that, and we can use all the same tools as Fannie and Freddie. And there's pretty standardized lists, for any conventional loan. So your typical stuff, typical package. But for the DSCR, like I mentioned, it's pretty easy. You just need an ID, right? Because we're gonna need to pull their fraud guard or whatever. So we'll do that as a lender. We're gonna need an appraisal, obviously, but we'll order that to get the rents and stuff. We're gonna need to pull their history, right? So just a couple things. So for DSCR, like nothing. It's pretty crazy. Just an ID and a pulse, and they have to pull credit. For a full package, just your typical stuff, and we would be happy to underwrite it to, non-QM guidelines or standard Fannie and Freddie guidelines. It really matters where you guys want to securitize this, but most of them probably aren't, right? It seems like they're kind of more holding them or selling them to other private investors, in this case.
Typically, yeah.
But yeah, if you could, if they want to go for the gusto and use me, because I'd probably be more expensive than your typical due diligence, right? Then we could write to those specific guidelines to make it securitizable. So I think that would be the advantage. I'd probably charge more than your typical. I don't know who you guys are using typically, probably some underwriting or lawyer services to draft docs. I can kind of put that all together, but I would probably charge more than your average. But the benefit would be, at the end of the day, I'm going to write it to where I'm securitizing it. And you guys are going to be selling 3 points higher than I am. And the same guideline is going to be crazy, right? So you guys will have a much more superior note.